John Jentz. I'm CEO of Latitude Uranium, formerly known as Labrador Uranium, and happy to be here today to give everybody an overview of the story. We have two exciting assets. Our historical assets have been in Labrador, which is in the eastern side of Canada, and just recently we acquired the Angilac project, which is in the territory of Nunavut, again in Canada. So both assets, district scale potential, both have existing resources, and both in safe jurisdictions in Canada. So exciting from that standpoint. We're fully funded this year. We have about $15 million in the bank. We'll be spending $8 million in Angilac. We'll be spending $4 million in Labrador. In Labrador, the main thing that's going on is a ground survey, which is going to try to identify more uranium resources, as well as identify, the team thinks that there's some IOCG potential, iron oxide, copper, gold. So we'll see if that's true. It will show up in the survey. And interestingly, in Angilac, for $8 million, we're going to do about a 6,000 meter drill program. We are a little over halfway done that. We should have some results coming out second week in August, which will hopefully show people that the existing resource there is 43 million pounds. It has a world-class grade of 0.69. For those in uranium, they can realize that that's in the top 10 grades globally. And for those not in uranium, if you do it at current rock values, it's about a 16, 17 gram ore body in a gold equivalent. So it's extremely high grade, and our shareholders and those involved in the company have said, that's great. Let's make it world grade in terms of size. And then we've truly got a world grade asset. So we're very excited about that. Again, fully funded. We're getting going right now, and results are going to start coming in a few weeks and should persist through the end of the year.
John, well, I was about to kind of describe you as the new kid on the block, but I think it's an unfair description based on what you've just told me. You got the money, you got the assets, you got the pounds on the ground, so a bit of an unfair advantage for sure. Let's just start with giving people a little bit of background on you, because we've not filmed or spoken on screen before. So yeah, what's your background?
Yep, background is I'm more of a financial person, although I do have a fairly good geological metageo by trade, but I've worked in investment banking for about 15 years, exclusively in mining, which is fine. So we've done good clients, but typically investment banking, it's tended to be more gold and copper, just because that's where the industry has been, or we'll see where clean tech takes the industry, but that's where it's been historically. How I got involved in the company is Phil Williams, who our chairman is. We worked together at a firm called Westwind. He was a uranium analyst and I was in banking, and we got along quite well. So when he told me about the Angilac acquisition, I was extremely excited. I'm extremely bullish on uranium. I do believe that, there's a 5 to 10 year bull cycle coming in uranium. We can go through why that is. And on the operational side, I've been VP Corporate Development Strategy for a company called Semifo that was sold to Endeavour, based in the UK, approximately the summer of 2020. And I've been on the board on an operational turnaround for a company called North American Palladium. That's been a palladium asset in North Bay or North Ontario. And that was sold in late 2019 for about $1 billion. So I've been up big and I've been small and I've been in between. So, but, really excites me about this is the team. The board's quite good, good supportive board. We've had people who's worked at the project before. And also our VPX is a uranium gal named Nancy Normer. She's extremely good. She's worked at Kigavik, which is just north of us in Nunavut, and she's worked in Saskatchewan. She's probably got about a 15-year history in uranium. And so, targeting and, our sole focus at Angilac is increasing the resource from 43 million pounds. And she's well qualified to do that. And hopefully the results we're going to start releasing are going to demonstrate that to people.
Right. Okay. Well, let's talk about the bench strength there, because there's a few names people will recognize. Obviously, you mentioned Phil Williams already, but Justin Reed, Jim Peterson, as well in there. So, what's attracted them to this project?
Well, Justin used to be the uranium analyst before he got into gold at a firm called Cormark back when the boom happened. So he's he actually worked at Paladin before operationally. So he's quite a good resource in terms of uranium and sort of who's who and. All that's very good. Jim's obviously the old CEO of LUR. And interestingly, I think the best, or one of the greatest nuggets that came to the company is that with LUR, it was a fellow named Rob Carpenter, who's on the board now. He used to work at Angilac back in the early 2000s with a firm called Kaminak. And he's a great geo. He's got a lot of historical knowledge. I mean, when we look up some of these historical reports that have been written on sort of things like regional geology of the area. He's of the three authors, he's one of them. So a lot of good institutional knowledge from the history about what's going on there in terms of being able to interpret. I mean, this is a structurally controlled environment, so having that history and that insight is for us, it's invaluable. So the board is terrific. Management's terrific. Nancy's good. Yeah, we've got a team in St. John's, 4 or 5 people. We've got some young geos who are performing exceptionally well. Things on site today are going surprisingly better than planned. Doesn't really happen, or we're getting more meters than we thought. We're, the core logging, all the operational details are well above. So from that standpoint, the assays will tell the story, but operationally, logistically, everything's going smooth sailing. So couldn't be happier in that respect.
Right. Okay. So we'll see. I see you picked up the Angilac project from Valor. Hence Jim and Rob joining the board. I guess is I'm intrigued the why. First of all, why did that make sense? You already had a project in Labrador. Why did this opportunity come along? And I guess the terms of the deal would be kind of interesting as well to note.
Yeah, both Phil Williams and I, we covered what was called the old Kivalliq, which is a company that had the asset 15 years ago. Both of us have always been intrigued by the asset because of the high grade. The knock against it, 15 years ago was that can you build in Nunavut? And since then, Agnico has done us all a great favor. It has demonstrated with Meliadine and Meadowbank, and I guess Hope Bay now, that you can successfully permit, successfully operate, build, and operate in the Southern Arctic. So that potential obstacle is eliminated or dealt with. And so when you look at the grade of this thing, it's eye popping. I mean, it's not eye popping for the Athabasca Basin, but it's eye-popping for the rest of the world where things are, 0.1 and less than 0.1 and huge tonnages. What really attracts us to the asset is that, but this could be, you could build this asset in the next cycle. I mean, we could build it now. We don't have an economic study today, an official one, but we've done some back of the cocktail napkin estimates and anyone, a good mining analyst who understands narrow vein mining would be able to figure out sort of a rough CapEx, a rough OpEx, and sort of rough economics. And this is economical at $50-$60 where we are in the uranium. Well, would we love more? Of course, but this is an asset that could actually, if this were in private hands, this would probably be built and would probably be operating at $1.5 million to £2 million a year. Would it be super exciting for public markets? Maybe not. But would it be, if you owned it personally, you'd be, as an owner and as a private owner, you'd be loving that. So, if we can increase that resource and get that production, everyone thinks there's a magical notion in everyone's head that you need 100 million pounds before you go into production. That's fine. Are we going to get there tomorrow? No. But are we going to demonstrate that we're on our way there? Yeah, of course. And, the plant size we'd be looking at is very small. We'd be looking at under 500 tons a day. So that's not, the plant size we used to build in Africa were between 4,000, 8,000 ton a day. So this would be, 1/5, 1/10 of that. So from that standpoint, not a problem. And the logistics up there are fairly known. Again, Agnico's shown that or paved the way. So this is really an asset that can go a little quicker than most on the development timeline.
Well, talk to me about what you're trying to do here, because obviously you're saying, okay, this asset right now isn't, necessarily a world beater, but it's a good start, right? And you'll build out the resource reserve numbers there, what one hopes with the drilling. But you've assembled a team. I'm looking at Justin Reed. I know he's a deal maker. I know you, I know Phil. You come from the financial side of things. This is about creating deals. So I'm intrigued as to what the conversations were when you went and raised that money. You got a lot of money in the bank. Most juniors are so cash constrained at the moment. You raised a lot of money. It's quite clear you're going to be quite aggressive. You picked up this asset. But what did you say to the groups where you've raised the money from? When you're talking to brokers, when you're talking to institutions, when you're talking to retail, what's the promise from you about what you're going to try and do in terms of value creation?
Yep. I think what we've told people, what we're going to really focused on delivering is really growing the resource. The resource has been the same since about 2013, so it's been the same for 10 years or so. And although it's not small, it's not big, it's sort of in that bit of no man's land or medium size. Again, in private hands, it would probably be in production, but people want to see 5 million pounds a year. That's fine. At 100 billion pounds, that would be fine as a resource. So what we've committed to people is that this money is going to be solely focused on drilling at Angilac and basically to grow the resource. And, the plan is this season, we're going to need 6,000 meters. The plan is next season, something a little bit more substantial than that, and then update the resource at the end of next season around this time next year. So, but what we're going to attempt to do to people is give people cross sections so they can see the existing resource, they can see where we're drilling, they can sort of join the lines, if you will, and even sort of someone who's not a mining engineer can sort of do a height times length times width times grade calculation and come up with their own rough gauge of our progress to date without actually having an official resource published.
Okay, so you talked recently in a press release about having drill targets, etc. Now, clearly, you've already got 43 million pounds here. There must be some historic data that you've kind of picked up along the way, and plus, obviously, you've got in the shape of Rob, someone who's worked in the area as well. So, does that make things easier in terms of targeting for the drill bit, in terms of your drill planning?
Absolutely, 100%. I mean, we have an embarrassment of riches in terms of targets, and the property is roughly 40 kilometers wide, 20 kilometers high. So this is a big property, and although it's got some great regional potential, there's great smoke everywhere. There's all sorts of things to follow up on. If this property were in a large company, you could easily do a 5-year, $20 million a year program for 5 years. And this would be highly proven. Obviously, that's not us today. But that's the potential that this property has. And so, in the short term, although we continue to evaluate some of these newer targets from our radiometric survey, we are solely focused. There's enough targets that we could be drilling for at least 2 to 5 years without much more target generation. So it's on strike, just a little bit of offset. There's some faulting in there. But we've only scratched the surface. The existing resource is on 5 kilometers of the 15-kilometer trend. So, I'm not unconvinced that we can't get to 100 billion pounds just on the existing trend and the offsets. We'll see. We'll prove that up. But it's got that potential.
So what's the time frame? So I appreciate what you want to do and the fact you got the money to get after it for sure. Looking at the macro, you're big bull on this one. Looking at the share price, it's not had the reaction yet. What do you think is going to be a driver of that share price? What's going to be a driver of the value creation for you? Is it just through the drill bit, and is it realistically, is it going to be Angilac that's going to be driving that more so than obviously the Labrador project?
Yeah, for sure. It's going to be the Angilak project. We believe that it's going to drive the value here. And a lot of people tend to do sort of the quick, dirty valuation on a dollar per pound basis, which is fine. So today we're at roughly $40 million. We're about $1 a pound today, plus or minus, which you can slice and dice the comps all you want. The Athabasca people trade in the $5 range. Should we be there? No, maybe not. Maybe not quite. We're not quite that high grade. But again, in our corporate presentation, we show the orientation of the ore body. Grade's important, but this starts at surface. It goes down 300 meters. You can open pit it. You can underground it. You can do a combo of the two. And realistically, if we do what we say we're going to do, and the shareholders want us to do, which is drill this season, drill next season, and demonstrate that growth, and the market still yawns on us, okay, that's fine. The plan would be then we'll take something and we'll demonstrate a few things that we can do. We can demonstrate the economics for people. We'll do a PEA or a pre-PEA, or we'll give people the information to get to the economics. And if it shows an NPV, which we believe is substantial, then people can go, okay, well, forget about the dollar per pound. If it's the NPV is X, maybe they get 0.5, 0.6, 0.7, pick your poison, because the economics are such. I mean, where the whole dollar per pound comes from is it's trying to, at a very high level, cut through the profitability of the project. And then if people aren't going to give us that value, we'll have to demonstrate that value, that they're that economic value to people one way or another.
Right. But how does that happen? Because like, you worked in the markets, you know what kind of moves the dial in the markets, right? If this project, which is coming to you with a lot of plans, or from day one, does not excite the market, does not get the market going, what do you do? Do you look at other assets? Do you go over to Labrador, or do you kind of start picking up the phone and saying to people, because you've got obviously Phil Williams's company over there in terms of consolidation? Are there deals to be done, or are you not concerned about that?
Sure, there's always deals to be done, but we're more concerned about getting the value at some reasonable value for Angilac. I mean, to dilute the company today is in my view, it's crazy, because we're not getting anywhere near the value that Angilac deserves, and so we're gonna have to surface that value. And if the market itself won't surface it for us, and we do what we say we're going to do, and we fulfill that, then some of our options are private equity. A lot of the private equity people are looking more substantially in the uranium square, where they haven't been sort of 5 or 10 years ago. I think that's probably a recognition that they see what I see, which is sort of a 5 to 10 year bull market. I mean, if you talk about decarbonization and net zero and all these goals that all the countries in the world has for themselves, nuclear is squarely in the pocket there. It just can't happen without it. I mean, you could argue if everything everyone promised and everyone hopes for works, you still may not get there. It's a monumental mountain to climb. But for sure, nuclear is in that square. I think that's why the more steadfast private equity people who have sort of a 5 to 10 year time frame are looking in there. The one thing that we'll have to do for people like that, and for some corporates, and what we're doing now, is demonstrate that permitting is not an issue, because corporates are one side, but the private equity people usually have the usual thing. They fundraise, they invest for 2 years, they manage and do their thing for 5 years, and with a 10-year life, you have to harvest in years 7 to 10. So they have to have a sense that the permitting is not going to mess up that time frame. So we're behind the scenes, we're doing, it's not exciting to the market, but it's exciting to people who have a little bit longer, sort of a 5 to 10 year time frame, both corporates and private equety people.
Okay, well, let's talk about the Nunavut and its acceptance of mining and the permitting process. Canada's had a bit of a rough ride as far as perception's concerned with regards to uranium permits and licenses just taking that a little bit longer. You obviously aware of that in the background, but what's Nunavut's attitude to uranium and mining?
Yep, there's 3 operating gold mines, 1 operating iron mine, and so can you get mining permitted? That should demonstrate to people that that's possible. And you can go look at the Agnico disclosure, the Baffinland disclosure, and then see that it's got a 10, 15 year history there. That's great. But uranium in particular, I think one of the issues that we have to explain better to people is the Kigavik. Kigavik is a deposit that's north of us. It's owned by mainly Orano, or the new Areva, that's the new name for them. And it's about 127 million pounds. It's quite large. It's quite good. It's about 0.5 in grade. It's nicely economic. But there's a perception that Nunavut is anti-uranium, which is just categorically false. There's one of the local people that are in the permitting process. It's called NTI, Nunavut Tuktuk Inc. It's an actual corporation, and it operates like we all think of a corporation. But what the territory did when they separated from the Northwest Territories in 1999, as well as put some federal money into this corporation, it manages all the subsurface mineral rights to the territory on Indian-owned land. And so our deal with NTI today is the same deal that Agnico has. It's the same deal that everybody has. And so from that standpoint, it's quite professionally run. It's quite well done. And anyone can go onto their website, just Google up NTI Nunavut, and you can see they have a uranium policy. And it says it's it obviously has to be done properly and with consultation and all that. But it's they say they're pro-uranium in there, so anyone can go and independently verify that. And so one of the things that we're doing is we've put a slide in our deck explaining the Kigavik history. And what Kigavik did, which is sort of a little odd, is they wanted a permit without a start date. That was the whole reason they got their permit denied. They submitted their permit, and they even said up front, at the current uranium price at the time in 2015, it was sort of the mid-30s. They said, at current prices, it's not economic. but we're submitting the permit and we'd like to keep the start date open-ended. Well, that didn't really go over well with a lot of people, including the government and including the local communities. And basically, there's commentary out there that says, that's great. We like uranium. We like these guys, but this isn't. They're not serious. We can't sit and have a project, over our heads for decades and decades and see what happens. And so when they basically said, when the company's serious to get going, come back and we're happy to entertain it.
Right. You come back when you're ready. Yeah, it's fair enough. Well, it was obviously
when you're serious.
Yeah, when you're serious, absolutely. And I think that's a reasonable response. Obviously, the market is getting a little bit more serious with prices in the high 50s at the moment, and I think it's well established what's going on geopolitically with regards to reactor builds, extensions, the Russia situation, Russian sanctions, etc. It's kind of it's building up into quite a nice story for uranium for sure. But we've got to think about exploration companies like yourself and that kind of that process. So if I'm looking in as an investor, potential investor of this company now, I'm seeing two assets which are being allocated a bunch of capital. You're not cash constrained in any way, but there's a process to go through. So time frames, I'd be in this for what? For what's going to happen when? If I look forward.
Well, I mean, it depends on what you can have both a short, medium, and time frame, depending on long time frame, depending on your outlook. What's going to create value in the short term, I believe, we're hopeful, is that if we can demonstrate that growth in size and to maintain the grade, that has even if you don't agree with the dollar per pound as a valuation metric, if we grow the pound by 20%. We should grow the value by 20% if all things being equal. I'm hopeful that dollar per pound is going to increase as well. So there's sort of a double whammy there. Again, that's going to take the market or someone to make that happen. In the medium term, I think for people who have a little bit more patience and outlook, if you will, who appreciate that as we advance the permitting and we demonstrate to people that it can be permitted, in my mind, I think it's a 2 to 5 year time frame. It may go quicker, it may go longer, but we've already started community consultations. We've already started that process. So the medium term outlook would be if we can demonstrate that this can be an asset for this cycle and it can get built in this cycle. I mean, it can get built. I mean, I should just build it. But if it's economic at the current market price, it's again, we can do all this and people can still yawn. That's fine. And then long term, ultimately, if we do what we say we're going to do, and we do all the right things, and ultimately the market still yawns and just doesn't care, that's fine. Today we have a handful of strategics in our shareholder base who are looking at us. They're looking at us for what we think, which is this is an asset for this cycle, and they're doing it's classic buyer sellers. Seller wants highest, buyer wants lowest. So they're sitting there, they've sort of dipped their toe in a little bit and watching us. I'm sure they're hoping that this all proves to be true and we do all the work and the market still yawns and they can pick us up at a sort of a more reasonable value. I don't see this company floundering because we may flounder just because the market yawns on us, but the asset is so good that the asset's going to be in someone's hands, and the asset, I believe, is going to get built in the next cycle by us, by someone else. We're not a lifestyle company. We're not wedded to this. We want to see the right things done, and we're not entrenched. So, someone comes knocking at our door, wants to look at the data, they can look all they want.
Okay, well, I think it's the first pass. That's been an interesting conversation, John. We can maybe if we hook up again, we can maybe run through CMB in a little bit more detail, but kind of get the gist of the allocation of capital and what you're focused on for the next few months. So, appreciate your time. Stay in touch, okay?
Sure. Thanks, Mike.